The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here on this, what is it, the 19th day of November. I must have written it so many times over the weekend from my charts that I sent to subscribers. So I just forgot. As the 19th, oh, can't believe we're almost about to wrap up November. And look at the market. The Dow's down 437. Look at this arch formation. Tried to bounce earlier on, just couldn't make it. Hit that 14-period moving average in the daily and plop, comes down again. I said to my subscribers that this weekly chart is just not looking good at all. I'm very worried about this monthly chart because we've only got a handful, really, of trading days to go. How will the market, how will the Dow on a monthly basis have a really good candle, try to get to even the middle of the candle, somewhere around the 25,200s, if it's struggling here? 300 points up should be, I mean, we closed Friday at 25,413. Very, very ugly action. It's the exact opposite of what we saw almost all of the year through until probably the middle of the year for some indexes, at least for October the 3rd for the Dow, the all-time high, 26,951. Lower lows and lower highs is a theme that I've been talking about for a while. Don't see any change to that. All right, let's go to the, so key support today will be set 24,950. Wow, if we get to the 24,850s today or tomorrow, it's just going to be 850s. I can't believe it. That would be, actually, that would be underneath the low of 3 days ago, 24,878. I was looking at this, so many charts over the weekend. I'll go one step at a time. And it seemed to me that there were support levels that should have held Thursday and Friday in many of the stocks, testing 200-period moving averages, daily, weekly, and they kind of held. Some went a little bit under, some went a little bit above. But there is no unified theme here, except the one unified theme is that there's tremendous discourse amongst the nations, the different sectors, even within the United States. We've got really a diverse attitude towards the market. Many people feel that, from what I'm hearing and reading, is that, yep, we deserve a bit of a break, and if we pull back, it's not a big deal because the market has made a habit of going to higher highs, so you can sit through this. And then there's another school that says, wait a minute, this is not business as usual. This could be a far deeper decline. I'm kind of in the middle school here. I'm anticipating that it's going to be the monthly charts that give me the most important information. The fact that we've really had, look, a 1 year consolidation in the Dow from January, it was the January high this year at 26,000, what was that, 616. And then we dropped to 23,340s. Rallied just slightly 300 points higher, to a little more, to 26,951. Now we're back in the middle of the range. How does this follow through as the sectors start to weaken that were leaders? What is going to sustain the move? Well, for the Dow, it's a defensive stocks, not defense, defensive stocks, like a Procter & Gamble, Johnson & Johnson, even a Merck, which has gone to all-time highs. They make a difference. They can help. They're not helping today. I mean, this is a sharp sell-off. So a couple of questions, a lot of questions actually came in. I'll try to deal with them. Let's just go one step at a time. We've got an entire week, but we've only got 4 trading days out of the 5 sessions, and really Friday is just a very quiet day. What I am looking at here is that the technicals in the monthly chart, this is the first time that we've gone for actually a couple of weeks with poor technicals, with a stochastic now at 80% instead of 81 or 82%, still above 80%. It's at 80.49. That's good. But that MACD is suggesting that there is an internal dilution of strength, and how we close over the next 1.5 weeks going into the first of the year, 1st of January, is going to be really important. Wait, we're 19, 20, yeah. Less than 2 weeks. So we'll look at that. A question in the den quickly is trend low today, 0.60 so far. Yeah, 0.60 is not the low enough for me to give me a reading. That would be terrible if even today, with the Dow down 400 and over 400 points, that we get a trend reading so low that the Dow goes down even further tomorrow morning as a not a guarantee, but as a really good chance of doing that. All right, let's get to the S&P. So the Dow is down 1.58. The S&P is down 1.56% at minus 42 at 26.93. Hasn't taken out the low of 3 days ago. It's going to be very important. But there's an arch. Look, there's a lowercase h within a lowercase h. So something really dramatic has to happen over the next, I would say, into tomorrow at 11 o'clock, 10 o'clock even. But something has to happen to the upside. Otherwise, we're doomed to retest the 2603 level. That was the low in October in the S&P. You really need to see the S&P above 2760. 2754 is the 200-period moving average. That's a lot of work. Something, there has to be maybe Brexit. I don't know what it is. But there has to be some pretty powerful catalyst to have a very strong up move and a sustained up move. Look at the QQQ. QQQ is now down 2.63%, down 4.43 at 163.07. It's taken out the low of 3 days ago. It is on its way, if it keeps this up, to go to the 160.09 low of I think that was October 29. Yep, October 29. And that weekly and monthly chart, well, both of them are just looking very, very poor. To really get garner strength, when I say garner strength, I mean for a lowercase h to a lowercase m, by Tuesday afternoon of next week, you really need to see 171. That way we can make one arch with another arch for a lowercase m formation, and then we come back down again. IWM, same thing. IWM trading down 1.96. At 148.95, down 297, 1.97%. Not good. So here what we're looking at is in the weekly chart, very poor technicals. Monthly chart, really poor technicals. This is kind of a leader. It was leading on the way up, and now it's leading on the way down. Went to the August high. And it was a precursor for a lot of the selling that we've seen. I don't want to go through the FANG stocks just yet. Let me just say that gold should be running very strongly. It's up, down. Is it down 0.6? It should be up $6 to $9. I would say at a minimum, it really should be down 12. Look, silver is weak as well. But look at the dollar. Now, I've spoken about this today. In fact, I was about to do that and I kind of forgot. I hope I get another chance. I want you to say we've taken no profits in our dollar position from the 90.07 low in April. I meant to say let's take something off now for the first time, because I think there's a chance that there's a Chapman wave flat-based restart, unconventional flat-based restart.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Everyone, we're back. So we're looking at the dollar. Dollar's down 23. Made a peak E at 97.69. Chapman Wave would look for higher peaks, the fourth highest peak, peak Ds, where other things can happen. It can go higher than that. Sometimes is what's called a right arm extension. That's exactly what happened here. The MACD did rally, the stochastic did rally, but it never went even close to 80%. And that's like a right shoulder failure pattern. And what happens is on the 12th of November, 97.69, spike to the upside, and then an immediate pullback. And in 2 bars, it takes out that big candle of the 12th, and it pulls back. Now, over the weekend, I sent out the charts, and I included the dollar chart. I'm sorry, folks, I forgot that I had done a whole bunch of work on the SMHs, the semis. I thought I'd sent it out, but I guess I hadn't. I got a couple of questions about, hey, you mentioned the semi, look at the chart in the comments, and there were no charts and comics, but there will be tomorrow. I will also be doing the dollar on a daily basis to show you a technique that I developed many years ago. It's called the Chapman Wave Flat Base Restart, but this is the unconventional flat base restart. What the heck does that mean? That just explains within the Chapman Wave methodology a particular concept that said, when you get to a peak D, the fourth highest peak, other things can happen. If within 3 bars and a certain chart formation, you make a new recovery high, that becomes E, but it could also be, if it's within 3 sessions, you can call it E/A. And then what happens is it starts a move with the technicals that suggest quite strongly that it could go higher. And then what happens is the base after that peak D, in this case at 93.71, that becomes like a magnet. And every time the price rallies, unlike the Chapman Wave Instant Restart, which is a powerful tool, because what it says is that after you make that D, if there's a really quick E/A, because you use an alternate account, and then a quick B, you could be on your way to a powerful move that goes even 4 or 5 higher peaks. It's like a brand new buy mode. It's an incredible technique. But when it fails to do that and it keeps coming down, and then at a certain point it takes out the left side low, in this case 93.71, it comes all the way back and it goes to 93.81. It almost takes it out. That's what I call Chapman wave flat base restart, and if it gets that close to the original low, which is lower than you expect from a peak D pullback in the instant restart, that starts off a series of higher highs that constantly come back towards the breakout level. And it's exactly what we've got here. So I'm saying that in the weekly chart, and for those of you who do Chapman wave analysis, and I know many of you do, you just include it in your work, or whatever other techniques you have, this is one of them. Because it went lower after that peak F/B, right there at the high of 97.69 in the weekly chart, the week of the 24th of August, and then it pulled back sharply, it means that there's a greater chance that this is not a peak C, although you've got a lot of room because you have to go down to the 90, under 94, and you're at 96.22. I'm saying let's keep in mind that there's a possibility that, and I think that this is a highly likely possibility, especially since there's a chance that at any point the Brexit news could suddenly produce finally a rally in the British pound. Even if it's a counter-trend rally, it's a rally nevertheless. The euro is acting quite well. So this is what I'm saying, that this is really a D/C, meaning that that peak D, the pink large lettered D right there, is going to tell me that there's going to be a deeper pullback, and that there's a chance we could even see a touch of the 93.41 200-period exponential moving average. So we might be taking some profits now for the very first time since we went long back in April via the UUP. And the only reason is I think that this is a period of consolidation. Even if there isn't a new all-time high very soon, I think that there's going to be a sideways to slightly down move. I still think monthly chart of the dollar looks fabulous. So that's where I wanted to go through that. I know it's a little elaborate. It's more like a Friday Chapman wave explanation of a Chapman wave technique. No problem. We're right here. Question in the den is, on your weekly DXY chart, you went to lower low between A and B. That's exactly right. And that's why I'm saying this is called the Chapman wave. Unconventional. Why is it unconventional? Because the instant restart just goes straight up. You can pull back, but you leave that trough after D, you just leave it alone. It's like a gap that takes a long time to be filled. The flat base restart says you pull back, not that heavily, but you do come back a little bit, and it's more a sideways to up move than a major thrust to the upside. And in the unconventional, it means that you actually take out the low, which theoretically in the Chapman wave is just a verboten to continue the move. You have to start a fresh move. In this case, it's the one exception to the rule where you can break a low on the left side because it's the same thing. Because eventually, what happens? It comes all the way back and it takes out the left side low of importance. In this case, 93.71 area. All right, that's the way it'll be for the moment. We'll go through this step by step, just as an educational thing. Question in the den: was that in the dollar? Was that? Let me move this to the side. So this is, look, that's from the low of 88.25 in the week of the 16th of February. It goes peak A in the dollar at continue. This is the dollar index, 90.93. Then it pulls back. Then it makes a slightly higher, it pulls back, and then underneath the previous high, it makes a little bit of a peak. And then there's another peak still under it, and that's like a gray A and a gray B. Why? Because that is the low. Let me circle this right here. This little circle right here. This little low right there. That is the low we're starting from. So every peak above it gets counted. So that's A, B, C, D, and D takes you right to the double top high of 95.53s in the week of the 22nd and 29th of June. Then it goes to a fractional high of E, pulls back, goes to a D, goes to an F on the 17th of August, the week of the 17th at 96.98. and then it pulls back very sharply, and it goes to that low that I said was about 93.81. Hope that clarifies that. Puts us in a wave G, huh? Ooh, G would be good. No, yeah. The way I've explained it, I went through this many times. That's exactly the way I'm looking at it. This is a C. My guess is it's really the D of the Chapman wave. Unconventional flat base restock. Oh, a lot of words. Okay, here we go. Questions. USD MXN, USD CAD. Let's go to the USD CAD. I don't know. Mexican, is that? I don't know. I haven't done that before. USD CAD. This is Canadian dollar, US dollar, and Canadian dollar. Yep, that went to a peak F at just over 1.325. It was one. That was a two-bar reversal, Chapman 2-bar reversal, 1.32645 and 1.32645 double top. Yes, the Canadian, but it's still holding very well. I'll be back. Basil Chapman, Tiger Technicians Hour. Dow's done 400.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi everyone, Basil Chapman, Tiger Technicians out. Dow's down 424, S&P's down 45. I had a question about CCJ, which CCJ is Chemical Coal. Chemical Coal. I thought they were in the copper area, but I can't even, I don't, maybe yes, maybe no. Maybe you could just tell me there in the den with a question. So CCJ is holding very well. That's what I typed in, but now I will do it because I circled this to say that my guess was, and this was about, I think it was about 2.5 weeks ago, maybe 3 uranium. That's right. So I was thinking that this is that the 200-period moving average in the weekly, and this is the orange line, 12.18 is the price, would become like a yo-yo. It would be a sine wave with prices going above and below and above and below. So the question is, would you add to CCJ? And I'm going to say to you, because you've already got a position, would you add? It's getting closer to the 12-ish, 1270-ish, slightly higher area where it starts to pull back, to go back to the 200-period moving average. So my thinking here is that because you've got a position and it's doing okay, I don't know if the risk reward of diminishing your original position is much greater now than if it's a pity that it gapped up because it acted well Thursday and Friday. And if you had asked me on Friday right here, would you add or not, I would have said, because it has the magnet of 1218 in the 200-period moving average of the magnet, and it probably will go slightly higher, I would add there. Now I'm saying to you, it's getting close to the area where it would start to pull back to retest 1218. So I'm going to stick with what I originally thought, and that it's in a trading range like a sine wave, wiggling up and yo-yoing over and under the orange moving average, the 200-period moving average in the weekly. I'm going to say to you, rather add to it below 1210 to 12. That's the area I would just add. I don't think I'd do it right now. If you wanted to start a small position at 1243, that's different, because what you would do then at 1243, no, let me just put it this way. If you bought it here at 1243 and the gap on a day like this when the Dow and the S&P are down 1.8%, I would say to you, as a trade, yes, I would buy here at 1241 because it's telling us something's going on. Uranium, who knew that uranium would perk up when the market was down sharply? But yeah, I'd say that I'd start a position at 1241, but I probably would have two stops. One is at 1221, and then one is just a little wider. And if you got stopped out of one and then all of a sudden it turned around and started moving up again, I wouldn't add that position back. But if you don't get stopped out, and it's at 1241 right now, and by the end of the day, it closes at 1247 to 1251, and then actually moves higher tomorrow, keep those same two positions. Have a trading stop on one half, and even however small or big the position is, and I'd have another stop that would be my entry price, whatever it is, plus 10 cents just to give us some leeway and just see what happens, because it's actually, that monthly candle is actually improving a lot. All right, CCJ trading at 1239, up 47 cents. Next, yeah, we got a bunch. I didn't see this huge bunch. Boeing, let's just do this one at a time. Boeing is down, I believe it should be. It's down, yep, whoa, 15 points, down 4.61. Oh, man, what a great peak D that was in the weekly chart with an all-time high of 394.28 the week of the 5th of October. 394, and it's trading at 320. It's down 70 points. That's about, what's it, about 18%? Ooh, that is big. No, wait, let me get that right. 70 points, yeah, amazing. 70 points. Yeah, Boeing's in trouble. Give it time. It'll be back, but not yet. Our next question was, low of the day, lowest level. Yeah, lowest level for a long look. Look at the monthly chart. It just needs a little bit more, and it's going to be the lowest level since the breakout candle of January of this year. So it's taken in less than a year. It's taking back a chunk of the gains of those many months of moving higher when I was in disbelief, right? Now I'm in belief. Call, VIX calls, yep, I can see that. VIX is acting quite nicely. The VIX is up at 2071, up 2.57, up 14%. Let's go to EEM. I'm not touching any of these. Hey, we have enough trouble right now just figuring out the general market. EEM is holding okay, but I'd be a little difficult. I don't see it right now. Emerging markets, maybe a little later on, maybe towards the early part of December, EEM starts to act better. it's holding pretty darn well right now. It's down 1.47% at 40.30, but that pattern that it's forming so far is not a bad pattern at all. But I wouldn't want to be in it right now. Just give it a little time. I think it will be there, but it isn't there yet. So did that. Transportation Index, IYT. So for my subscribers to my opening call, in my overview section, I said the IYT is trading in a sideways formation, but at the lower end of its rectangle formation. Well, this rectangle formation right here. This is what I was thinking of, this rectangle right there. See that? Okay, so it's at the lower end. It's a kind of now in the middle, right? But if you look at the monthly chart over there, this is not great action. It's okay action, but not great action. After such a smash, and let's face it, going from 209 down to the 178 area, not good, not good at all. And then that weekly chart is just, it cannot break a hold above the pink line, the 9-period moving average. So the IYT, even though crude oil is way, I mean, look at crude oil. Crude oil is way down. It's down 7 cents today, 56.60. Tried to rally Friday, couldn't hold it, and pulling back. This is not a good night, a good scenario. Look at that monthly chart. A second monthly big red candle. Month is young, anything can happen, but right now it doesn't look so good. So yeah, I'm surprised. Let's see what the airline index is doing. XAL is down 1.19 at 99.66. Down 1.18%. Yeah, not good. I'm surprised. It should be doing much better. Next question is, oh, the SOX. Oh, I haven't looked at the actual SOX index. I usually SMHs. SMHs I've done completely notated. How many times am I going to have to do that? SMH. SMH is making the arch formation. There were two good green candles. Intel was a big help, and certainly NVIDIA was not a big help. So now everything's pulling back very sharply. That monthly candle, I've been warning since March. This is not a good scenario that the semiconductors, they're in everything. And think about automobiles. If I remember reading that there were in like a handful of chips in automobiles quite a few years ago. Then it was more than a handful. Then it was a really big amount. And then the number I read the other day, I can't remember it offhand, but it was just huge to believe that so many things. I mean, let's face it, even the shock absorbers, which were using completely different mechanisms, now have semiconductor chips. It's important. Everything has it to be measured. So this is not a good sign. SMHs are down 2.41, down 2.57% at 91.86. Doesn't look very good. I'll be back. Basil Chapman, Tiger Conditions Hour. Let's just have a quick look at the E-mini. E-mini made a trough D. It's trying to bounce. I'll be back. We'll talk about it.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi, folks, we're back. A big rally in the Dow. Dow's down 384 points. Yeah, oh, well, that's good. It's good. We're certainly getting oversold. The problem with the bear phase is that every time you get oversold and you say, "Oh, I want to," I'm just waiting for a bounce, and then you say, "Wait, the bounce could be like an hour and a half ago because that would be normal, or 2 days ago." That's tough stuff. Okay, I was asked about Click. No, was I asked about Click or Clack? Yeah, Click. Click is Kulika and Safa, isn't it? Well, let me find it right here. Kulika and Safa Industries. I think they're in something to do with the semiconductors. Not a good chart at all. It's at 20.20. I did say we used to have two guys here, two brothers, the Maliazzi brothers, Click and Clack, Car Talk, Saturday morning on NPR. I used to listen to them for decades. I used to listen to them. They were so funny, but they were not so funny about the automobile part. They were funny about social things. When a guy or a woman called and they were talking about what their girlfriend or boyfriend liked in cars. That was where they were the best. Click. So look at Clack. Clack. Keep your eye on the left side. You're right here on the left. See this little pattern right here, this inverted V. Now look at it. You get more. You get more of the cup formation. Look, and it's holding pretty well, even with an ugly day today. Down 3.17% at 93.83. Yeah, this is a better pattern than the other. I wouldn't touch either. And all right, next question I had is Goldman Sachs. Of course, I should have known I'd get the Goldman question. Oh my goodness, down again, down at 198 minus 320. Just a whopping giveaway of all the gains of the last year and a half or more since. Where are we now? We're trading at 198. The last time this was at 198 was in that candle of November. This is the election candle of November of 2016. 174.73 was the low. 220.77 was the high. Never looked back. Just kept going. Had a big pullback in March, I think it was. Yeah, March for about 2 months, and then boom, goes off to 275. So 275.31 was the all-time high in March of this year, and now it's trading at 199, 200 points. That's 75 points. Oh, it's another big whopper of a down move. Yeah, this is Goldman Sachs is getting close to at least an attempt to find a base of support, but for the big next move up, that weekly chart is going to need a lot of technical support. I think I've got I did the SMHs. Yeah, Intel was acting very nicely for a couple of days last week. After the big move from the 42s, it goes all the way to about 49, and then it pulls back to about 47, and then it bounces sharply, makes a recovery high. No, it doesn't. It just misses that. So this pattern right here says that Intel is holding well, very well, and then keep your eye on it, because when the semiconductors turn to the upside again, which they will, SMH right now trading at 91.82. If over the next week the semis don't close under 90, when there's a rebound, even if it's just a rebound, it could be very sharp and it could be led by Intel. What is Advanced Micro Devices? I had that peak right there. I had that peak D in the weekly chart, possible peak F serious top in the monthly chart. It's down 90 cents today, and a peak E in the daily at 34.14 on the 13th of September. Hit 16 just a week and a half ago. Whoa, that's half. It cut in half, and now it's trying to rally, and it's having a tough time making the arch formation. Just be real careful. That's all I can say. Okay, I got all those questions. Oh no, there's a bunch of them that I didn't get. Oh, XLI, there it is, XLI. XLI is, they all have the same patterns. The ones that are holding quite nicely here are the ones that have this arch formation. Probably this is too much information, but that sharp pullback with the rally that stalled in the arch formation, kind of reminds me of a little doggy at a fire hydrant. Well, this is the one where you don't want to see this leg go down too much. It's stopping here. XLI is the Industrial Spider Fund. You do not want to see it over the next couple of days trade under 69, because there's a 70.97 right now. Under 69, you get that arch formation instead of stalling and become a very positive action, H that goes to an M pattern, it'll just break down. So far, down 1.44%. It's a little bit better, not much, than the overall market itself. So I'll be watching that closely. Next question I had was, today's Traders Corner, a couple of questions about it. I will put the semis in tomorrow. I'm sorry, I thought I'd done it. Did that. Oh, yes. So I don't know what the put call relationship is right now, but you've got to expect that with this intense selling day after day, that it's going to start to you're going to see the put ratio really expand quite a bit in a day like this. And so it would mean that there'd have to be a sharp reversal to the upside, a close that's way better, way off the lows, maybe not a great close, but better, and then another day tomorrow. So what happens is with the put call is that every time it fails, you get more and more people saying, oh, this is terrible. So when it reverses back up again, it's either the speed and then the holding pattern. As it rises, it doesn't fall anymore. It just keeps holding to higher highs, and that forces people to start to cover or change their posture. But the patterns that we're looking at are not good patterns. Reason why I've been telling subscribers for a long time, raise cash. I wonder if one of our positions, which was, look at that. We've got one position that's up 0.56% today. This is a regular old stock. It's not an inverse index or anything. And it's up 0.56 when the general market is down between 1.5 and 1.6, actually between 1.5 and 2.2. So that's nice action. So that's an counter trend move to the market, not to itself, but to the market. Got that. Oh, here's something that I want to look at. I didn't finish looking at the TLT, and the TLT is up 0.03 today, 114.73. This is not great action. This is still saying to me that the bond market is still more worried about another higher rate increase. And because of that, you're not getting the tradition of money just flowing out of stocks into the security of the bond market. This is different. This is actually a rally that went to a lower low. The 112.62 low of the 5th of October went on the 2nd of November to 111.90. So this is a bounce. But the weekly chart is saying this bounce could last a little longer in the TLT, so yields could go down, but they're not going down as quickly as I thought.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Hi, folks. So before you go to Steve and you go to Dave and you go to Tom, let me just show you. This is kind of rectangle formation right for me right here in the 2-minute chart. The same in the 5. The the 10-minute is starting to see an improvement, and that's very important. So let me just give you parameters. If by, I said to subscribers, it's really that 130 time frame that you want to see things happen. So if at 130, instead of being down 46 points in the E-mini at 26.96, there's a rally above 27.10. There's a chance you could hit 27.16. Oh, that is way high, but you know what the market's been doing. So keep that in mind. No, let me make it simple. At 27.05, that's 10 points up from here. All of a sudden, there'll be a bit of a relief follow through. I don't know if there'll be another reversal to the downside. They've done that all morning to lower lows. Now I think there's a chance that you could try to rally. So at 27.05, holding above that, 2709, 2710 would be the next upper level buy tomorrow. And if there's a pullback, any further pullback, and you go into 2685, good luck. Could be a very ugly session. That's the way I'm looking at. I think it's somewhat overbought. Of course, I've said that before, and we've seen rallies that fail. It's sustaining a rally that's important. Quickly now, here we go. Why was Ford higher the other day? And even now we're looking at Ford as having, it's up to 18 cents at 9.23. Why did General Motors hold so nicely over the past couple of weeks when it was down under 31 and now to 35.74? These are questions I pondered over the weekend, and I really thought about it quite a lot. And I couldn't come to a conclusion because it's very tough. How do we really know what's going on with this? You know, tariffs, we don't know what's being affected, etc. What I can say is that I think that in 2 weeks' time, if the autos, the U.S. autos like Ford and General Motors, if they're actually holding very well and have gone to higher highs and not lower lows, that's going to be a tip-off that there's a secular change, let's call it this way, that there are certain sectors that are starting to show strength that were the very weak ones, and now it's very important that they show strength, like the autos. I'll be back tomorrow. Have a great day. Check out my opening call.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.